Kam Brar for Kam's Mortgage Minute. Today I thought we would talk about Helocs. For those of you who are not familiar with this acronym, it basically stands for Home Equity Lines of Credit. That's it. Big fancy phrase. I'm sure you've heard it before. I do get asked quite often from folks, and what exactly does that mean? And that's exactly what it means. Simply a home equity line of credit. How it differs from a standard line of credit is that basically your home's equity is what's being used to securitize or collateralize this line of credit. It functions basically like any other line of credit. You have the option of making minimum interest payments if that's all you want to do. You can re-advance it as much as you like, and all that simply means is let's assume that your line of credit limit is $200,000. Today you borrow $50,000. Next month you want to borrow another $50,000. The month after you want to borrow another $50,000. You can do that. You can pay down as much as you like. You can pay it down in any increment you like. It's basically a product that gives you total flexibility. Sometimes when I'm chatting with people, I'll say, well, do you have a mortgage? They say, yeah. I go, do you have anything else? Well, they say we have a line of credit too. Well, what people sometimes fail to realize is basically this home equity line of credit, this Heloc, is essentially just a mortgage. Don't think of it as anything different. It doesn't have to confuse you. It's the same product basically, except it just has different payment privileges and different options in how it's set up. Now, with home equity lines of credit, the maximum you're allowed under our new regulations these days is 65% of the value of your property. So basically that means is that if your house is worth $500,000, you cannot exceed 65% of that value in the form of a line of credit. Now, that's not to say that we can't lend beyond that, but we just cannot have the line of credit be any larger than that component. Now, it used to be 80%, but the government a few months back scaled it to 65%. Okay, so that's kind of the limit on it. So if you're buying a house with 5% down, are you eligible for a line of credit, a home equity line? Absolutely not, simply because that 65 rule would kick it out. Now, who is a home equity line of credit good for? Well, it's good for a lot of situations. If you have a property that is, let's say, free and clear, you want to invest and buy, let's say, stocks, or you want to invest in another property, it's a great way to use all the equity that you have in this property and be able to basically, have the minimal cost for it interest-wise, because it gives you a lot of options with your cash flow, because again, like I said, you can make interest-only payments if you want to. And the fact that if you're using it for an investment is great because you can write off the interest cost. So there's inherently a second advantage to that. Another time where it might be really useful for you is you just might get paid in different kinds of increments. You might be a business owner and you've got different amounts coming in different months, and you've got large lump sums coming out, and maybe at other times it's a little quieter. It just gives you a lot of flexibility in how you do things. And basically with lines of credit, the rates that they hover around are all benchmarked on prime, and usually prime plus something. And most lines of credits that we have today are prime plus a half. So with Bank of Canada prime rate being at 3%, that would mean that the rate you're getting is 3.5%. And again, like I said, a very affordable way to borrow money. For example, if you had $100,000 that you had borrowed, that would mean $3,500 a year of annual interest, or in essence, a little under $300 a month. So pretty cheap money that way. Now, can the rate go up? Absolutely. As prime moves up, so does yours. I mean, your spread will stay the same if you're in, let's say, prime plus a half or whatever it is. But if prime rate moves up, your interest cost is going to go up, which means that your interest for the following month will be a bit more. So that's essentially how they work. Now, hopefully, we've unraveled the mystery of these Helocs. And again, if you need anything such as that, give us a shout at the Auxilium team. And Auxilium, if you don't know, simply means to care, aid, assist, and support, and that's exactly what we do here. We're looking forward to assisting you with any and all your mortgage needs, whether it be a purchase, a refinance, or whatever that may be. We're here to help, so give us a shout. We look forward to assisting you.